Good morning, good morning. How you guys doing today? It's a Monday. A little bit cloudy outside. We had such a storm last night. It was absolutely crazy. Thunder, lightning, wind, the rain. I could hear it slamming on the roof. It was phenomenal. Just unbelievable. How you guys been? Gold making its drop from supply area. You all get a chance to read the latest report? We're gonna go through it later at the end of the class. So if you didn't have a chance to read it, we'll go through it together. It was nice to read. Thank you, Marvin. Glad you thought so. We're going to read through it. A lot of insight with respect to the markets, what's taking place. It's always nice. I've always found it nice to step away from the markets when the markets are closed and just look at the charts, look at the data, look at the information, crunch it through, analyze it, and come up with logical conclusions. All throughout my trading career, I've always found that when I did my report, what was in the report was the best that I was going to be able to produce. Because of that moment every weekend of just focusing on looking at the data, looking at the information and putting it, crunching it through, analyzing it, and coming to logical conclusions based on what I know to be true. There's a lot of times when the market is live and trading, your emotions can get kicked in, and you start not thinking critically about what's in front of you. So the report has always played a very key role in my life. Okay, so we're going to take a look at that at the end of today's class. Okay, if you had a chance to read through it, you're already prepared for the markets this week. I thought it was 9 a.m. Yeah, welcome. Just the intro. Okay, no problem. So I got your homeworks. A lot of you submitted your homework, which was nice to see. So let's head over there. Euro, Japanese yen. All the way back here. Let's see. Session 5 of 7. Here we are. Okay, this is where we left off. Right here. There we go. We'll play it forward as if we're looking at a live market. But like I like to do, let's look at the overall situation in the markets. It's good to know what was taking place leading up to this. So it looks like this drop took place. Where's my pen? Let's wait for my pen to load up. Here. Okay. So it looked like this drop took place from monthly supply. So there was a rally up until monthly supply, and then monthly supply was pushing price downwards. Into all-time lows. Okay, so there's going to be a very low of price here in the 133 areas. We can mark that. All-time low. And we can sync Okay, so we know. And let's see. And what's interesting is that up here, this initial drop was a reaction to this here, 12-month supply. Okay, interesting. 12-month supply. And then monthly supply, and then drop. Momentum shifted on monthly supply. It looks more like a dynamic shift. Yeah. Because the rally up did not produce a rally base, excuse me, drop base rally with a trend line. So this was the key zone that needed to be removed. Yep. This should be like this. Like that. Yeah, key zone removed. Great. So let's mark it. Monthly supply. And then we will sync it all across the board. It should show up here on the daily chart. We could even adjust it like that. Perfect. Monthly came into play there, and price started to drop. Okay. All right. Now we're all on the same page. Now we know what we're watching here. So now when we study, the trend lines, the zones, if we see any type of weird price action like this stuff here, when you're asking yourself, why such a large drop into this base? Why was there such a significant move to the downside? It's this curiosity that I always had when studying the charts that led me to gain the knowledge that I have. Because if I wasn't curious, if I didn't think about the little details and ask myself why and investigate, I wouldn't know. Then you take things for granted. You shouldn't be taking things for granted. So I see a big drop like that, and I know instinctively that this is a move from higher time frame forces here. Okay, that's what it looks like. And so you're not going to get the best looking trend lines to the downside on a daily chart when it's reacting from monthly supply. So you got to be careful of that. Why? Because you're likely going to see better structures on higher time frames, because that is what's being produced. Okay. So, but we're going to go forward and we're going to take a look at what we have here. Okay. All right. Any questions to start off? We've got a nice full room now. Nice to see you all. Lots of people. Good. All right. Let me just take a sip of my coffee. Okay. So this is what we have. Oops, too fast. I don't like that. Okay, so price is coming down. Do we have any demand zones here? It looked like low quality. Looked like we missed something back here. Low quality, yeah, low quality, but I see something here that I think is important. There we go. So guys, you need to adjust that. Okay. Okay, that looks better. Okay, see the reaction from that demand zone? Now we see it, right? Yeah, I could just tell by zooming back and looking at the chart. I could just tell that that was a missed area there. So now we have price reacting to the upside from that demand zone. Pretty significant demand zone? Yeah, I would say so. Why is that? Well, you know, you got to be able to look at charts. Once you have all your supply and demand zones, what's essential is to be able to determine what are the key ones, okay? The more important ones. And we get into that more in level 2. But just to give you a little idea of what I'm talking about, you know, you got to look at price action and determine what were the key turning areas, right? You see price was dropping here, right? Yeah, it turned here, but where did that get you, right? Not very far until here. Okay, and then it turned, and then there was a zone here that caused it to go up this far. But then when it came back down, it removed it. So not that important, was it? Yeah. So it came up, sideways, up, didn't do anything yet, still. Okay. Then you have this zone here. Look how high it took it. And then down, and then look how high. Okay. So you can tell just by looking at the chart that this area is important. Okay. And again, when you get to level 2, you'll understand the importance of structure, of key zones, magic zones that we like to call magic zones, the zones that we are looking at for gaining entry into a trade, right? But your eyes are going to start to realize what's going on. You know, when you study the charts long enough and you look at the structure and you know which ones are the key zones and you know when price is ranging as opposed to consolidating and when it enters a trend and all that stuff, you're going to realize the importance of certain areas. Okay? Look what happened when price came down, back down to this area, okay? Because eventually these zones got taken out and it came back down to that exact zone. And then look, wasn't that the beginning of the massive move, right? Right here. So that's an important zone, right? Because when you look at price and you read what it's up to, you know, look, down, offloading of short positions, onloading long positions, higher time frame force pushing price down, but where does it load back up? Right here. And then it starts its journey back up. Okay? So you can locate these zones that hold importance on the chart. And why is it important? The reason why it's important is because when you know that there are forces pushing price down here, like the monthly supply zone, and you're looking at the chart and you see very little to stop price from heading even lower, it's like one of the reasons when you look at the Araujo report, okay, when you scroll down here and you look at the pro watch list and trade ideas, okay, you'll see that there were forecasts made of price, okay? Like for instance, the CAD Japanese yen. This was a chart that I had placed, okay? And here was the supply area. And I said, when this zone is removed, that is a long signal, meaning this is the only obstacle that is holding price down. Once this obstacle is removed, it's like opening up a dam, okay? There's a dam wall holding the water in, but once that dam is broken through, it's clear to move higher, okay? Until there's going to be another obstacle that's going to stop price from moving. This is why I place targets at certain spots on the charts, because I'm constantly looking for where these dams are. And when these dams get broken through, where will price want to flow to until there's another obstruction? And this is all based on looking at the charts, knowing what zones are the institutional zones, knowing what imbalances are just simply imbalances and not zones, and reading this information on each of the time frames to determine where price is likely going to go, right? So when we see that there was a break of that supply area, on the lower time frame, there were zones that were created that I pointed out to everybody. I said, look, here's the zone. This is where we take a trade from. And price dropped down into those zones, momentum shifted off of it, and there you go. And then price moves exactly as forecasted. Okay, so the reason why I post these is so that you understand that there's reason for why I'm suggesting these moves are going to take place. And that's why we discuss them in our classes. And that's why I post them in the observation journals, is because it's one thing to draw the supply and demand and the trend lines, but there's a reason why we're drawing supply, demand, and trend lines. There's a reason. A lot of people, when they first join the school, they think, oh, you draw a demand zone, you should be buying there. You know, you draw a supply zone, you should be selling there. No, we're drawing them out because we're trying to figure out the story, okay, of what is taking place. The vast majority of demand zones get broken through. The vast majority of supply zones get broken through, okay? That's just a matter of fact. Because those zones are only created and used for specific reasons. Some are created just in order to produce momentum in one direction. But later on, when price, retraces to that zone, its worth is zero because it's no longer needed. Okay, they are no longer using that area to thrust price higher. So those zones will get taken out. So it's about reading the story of price. All right, that's why we're drawing all these zones and the trend lines, is because we want to look back and see what story is being told. And then when you can read the chart and determine what the story is, then you can determine, oh, I know what the story is. There's a strong force being pushed up here. There's a strong force. There's nothing to stop this from heading higher, except for this supply area. Well, if that's the case and that's the story, then what do you think is going to happen when that supply area gets taken out? Oh, wow. Force of price is going to push price to the upside, and we're going to likely get to this target. Right. Okay. So then your reading of the chart skills should be good if that's exactly what takes place. You have to practice your chart skills. I'm always practicing my chart skills. I'm always reading the charts and then placing targets to see whether or not price is going to do exactly as I had suspected. Because the way you make money in trading is to know where price is going to go. And I know you've heard it many other times. People say, you can never know where the market's going to go. You can't. It's just the nature of the markets. You're never going to know. Nobody knows where the market's going to go. If somebody says they know where the market's going to go, they're lying to you. You know, I've seen this so many times, and I just roll my eyes. I'm like, that's the most ignorant thing a person can say. If you don't know, then you shouldn't speak of it, okay? You shouldn't speak of it. You should just say, my experience is I don't know where the market is going. Maybe other people do, I don't know. But don't say nobody knows, because it's nonsense. How else would I be able to know that CAD yen was going to rally up if I didn't know with high degree of certainty that that was going to happen? There are things that I read in the market that helped me to determine that that was going to take place. And so that gets taken out, and then price rallies up. Okay? Pretty damn high. Okay? And then there's the signal to get out, because momentum was to the upside on the weekly chart. momentum broke on one time frame lower. These are concepts that we teach in level 3. It's out, momentum's broken, exit the trade. Okay. Same thing with the pound US dollar, waiting for that supply to be taken out. Once it's taken out, we expected price to continue higher. And our target was 129.54, and look what happens. Ka-ching, supply gets taken out, 129.54 gets contacted, and price continues higher. Why? Because we read the chart properly. Okay. And so the reason, again, going back to this, the reason why I post this is because I'm trying to transfer these skills, this mindset, this way of thinking onto you. So the reason why I'm posting these thoughts is because I want you to see what I'm thinking. I want you to see what I'm seeing. I want you to journal these things and make sense of these things and then see the results of it, okay? Because it's one thing to say, oh, I have the skills of being able to determine where price is going to go, but it's another thing to actually prove it. And this is why I'm posting these alerts and these targets and so forth, is because I'm doing it for myself, to prove to myself that my analysis was correct. Because if price doesn't go to my targets, I don't look at that as a failure. I just look at that as an opportunity to determine what it was in my analysis that was wrong. I'm never going to be perfect, okay? Never going to be perfect. I'm going to make lots of mistakes, but I make more accurate calls, a lot more accurate calls than I do the mistakes. And so I am a perfectionist, and I don't like making mistakes, and I get really hard on myself. And when I make mistakes, I really focus on what it was that made me make that mistake. And so yeah, so this is why I do what I do, okay, guys? So let's get back to this here and the importance of what I was pointing out, okay? So you're going to get to the point, like I said, that you're going to look at the charts and you're going to determine what was the storyline, what was taking place, okay? And as we said, this happened to be something that was important. It shifted the momentum from down to, hey, it's time to go up, okay? So this is a zone that I would be paying particular attention to, especially because I know that higher time frame forces are pushing price to the downside here. So it's likely price is going to go lower because we have 12-month supply in play, dynamic shift on the monthly hitting supply. It's likely going to go lower. So in my experience, for price to go lower, what tends to happen is these very important key areas that were used to shift price from being down to up, those are the areas that we want to watch for if we want to participate in this momentum to the downside. Because these zones that were used to propel price higher, when the algorithms of the banks, when they're pushing price and creating price action on the charts to lure retail traders into doing the opposite that the banks want to do, when they come into these areas, they are programmed to recognize the very bottom where the orders were to start accumulating along. And when those areas are removed, they create supply. And then those areas are typically used to drop price. Not all the time, but typically. Okay? Not all the time, but typically. So, knowing this, when you're looking at a live chart and you're like, oh, we got major supply in play here, looks like price is going to push to the downside. This looks like a pivotal area that would need to be removed. And so let's watch this area to see if I can participate in a trade to the downside. All right, so let's continue and see. All right, so it looks like you see how that trend line was about to break and then it didn't break. Interesting, right? Well, remember how I told you because of this massive drop, it makes for a very awkward trend line to the downside, because the banks are not really focusing on making a structure to the downside on the daily chart. Okay, that's the reason why. They're responding from supply, creating supply, and prices dropping because of the massive short positions that they're opening. They're not thinking about making nice looking structures to the downside. Okay, so in essence, this trend line comes down to about here, and that's it. It's not valuable anymore. You see how it's still touching this candle here? So that's it. It ends there. The value of that trend line ends there. Okay, that's it. Move forward. Okay, so price is coasting to the side now. Oh, did you just see what happened? See? As traders that draw supply and demand very specifically, I've always said when you draw supply and demand, you got to be very specific. You have to be a perfectionist. I'm naturally a perfectionist. I naturally want things to be done properly. And I look at the little details of everything. I'm just naturally like that. So when I draw a demand zone, I want it to be perfect. When a demand zone gets taken out, I want to look at it and know that even if it's by a pip, it's by a pip and it's done. Okay? That's just how I do things. So I see that it's been removed here. Right there. Now I go up to find the imbalance that caused it. Sometimes it's hard when you're looking at it full size like that. I'd say, well, you got 1, 2, 3, almost like a border candle in between here. Yeah, probably something like that. Probably something like that, it looks like. What do you guys think? There. It's a little bit tricky because you've got these candles basing, border, basing. You know, it's almost like stair steppers to the downside, right? You see that? It's almost like stair steppers. So you got to be very careful sometimes with this. I would have much rather seen a nice rally basing candles and then just momentum candles to the downside, because then it would be very clear like this. When it's this stair stepping thing, you got to be careful. Okay, let me just take another sip of my coffee. Marvin writes, yeah, I remember that chart, CAD yen, all the space on the monthly. Yeah. Okay, so let's see. So now this is a pivotal moment here. Okay, that zone's being taken out. This is big. So let's see what happens. Price goes lower, and that zone's already been taken out. Okay, let's see. So the next zone is down here, and it was responsible for moving price to all-time highs, but we've had this ugly price action here, which is not very readable, which is why that has been drawn in as all-time highs. But this could be giving us false information because there was actually price action here. It's not all-time highs. And for this to be legitimately a zone, there would have had to be some supply here. So this is questionable. Okay. I'll make it in gray, meaning questionable. Don't bet your farm on it. Okay. So let's go forward. Oh, coming up. Oh, look at that. Look at that. You see that? Where's it rallying into? Right into that very important area. Okay? This is a potential trade idea. This is a potential trade right here. Short signal. Because that's the short signal, right? All the time frame supplies coming into play. This is a daily chart, removes the very bottom here. Now, it may not work out, but it's high odds. Okay? You're not going to be perfect all the time. But the bottom line is it's high odds. That's what's important, is to know what you're dealing with. When you know what you're dealing with, you've got it all stacked in your favor. You don't have to be perfect. When you know what you're dealing with, you can take losses. It's okay. All right? But the thing is, the odds are stacked in your favor because nobody else knows that monthly supply is in play and pushing price to the downside. Nobody else knows that this dynamic shift on the monthly chart took place because a 12-month supply is in play. Nobody knows that but you guys. All right? Just us. That's extremely, extremely valuable information. So this is a short signal as far as I can see it. And if it doesn't work, it's okay. Sometimes they won't work, okay? You can't be perfect. This could break out, create a demand, and then eventually break through this, create a supply, and then use that supply and drop price. That happens too. You know how many times stuff like that happens? And then I'm like, oh, wait a minute. Why did that happen? And it's not until after I realized that there was a very strong force coming in here that was greater than the force of a daily supply zone. And that's why it broke through. But because the ultimate force was to the downside, it eventually broke through that demand, creating supply, and then the short signal was there. But sometimes you don't see it until afterwards, okay? And sometimes, you know, when your emotions get, you know, played into this whole scenario, and it happens all the time to me. I'm not immune to that. And I especially take it to heart because, you know, here I am doing all this work to find this wonderful supply area. Then all of a sudden I take a trade and then I lose. Sometimes what can happen is you get so into this world of, oh, but why? Why did that break through? That doesn't make any sense. And you're so focused on the loss that you took that you're not paying attention to the fact that there's a new trade signal that's just about to be created. You know, instead of thinking, oh, I was wrong, price doesn't want to go lower, you have to think, no, everything is still what I know to be true. Monthly supply, 12-month supply, everything is still true. Let's just keep watching to see if a new short signal is created. So it's very easy to get off track and just automatically dismantle your whole thesis on the trade and move on to other trades. And then later on, when you come back onto the chart and you see that this played out like this, you're like, oh my God, how did I miss that? You know, it's very easy for that to happen. And it's happened to me more times than I can count. More times than I can count, believe me. All right. So, so a scenario like this can definitely play out, is what I'm saying. Let's see. So, look at that. You see what's going on here? See the big drop? Why do you think such an aggressive drop like that? Who do you think is filling in massive sell orders there? Okay. Now let's take a look. It looked like it actually penetrated through that zone just a little bit. But if I was taking a trade here, you know, I probably would have placed my stop loss above the stair steppers like that. Probably. just to be safe. It would have been something like that. Okay, because I've seen too often price comes up into these areas like this and then drops. It happens. All right. But that would have been, this would have been so far so good. A good trade. But let's do that. And do this. Okay. And let's see what happens here. Ooh. Right through. Look at that. Look at that. The selling coming in. Okay. And you understand why, right? Because again, when you look at the grand picture, look at that area. That played a pivotal role in projecting price to the upside. And now when massive supply is in play, guess what? They need to remove those roadblocks. And when they do, they use supply to do so. And they retrace it back to those areas of supply, and then boom. I just noticed something here as well that I missed. Look at that. Look at that. Okay. All right, let's play it forward. Boom, now it's hitting this area. This is a good sign. When price drops from a supply zone, creates a low, hits that supply, and then removes that low, this is a great sign for that trade. Okay, a great sign. Because a lot of times too, price will rally up to a supply area that you determine is going to be the area that's going to propel price to the downside. And then what happens is price comes and is not able to surpass those lows, and then it eventually breaks. Okay, if it's not able to surpass those lows and it starts heading higher, be wary of what's going on, because it will many times just start eating through and start heading higher. Once it breaks those lows, it's like, you're on a good path. Okay. Let me see if I'm missing anything. Yeah, that looks good. So you see how it removed this zone. I told you this might not even be a zone, okay? Because of the, the location of that area and how it's potentially not even anything of an importance. Okay, so let's see what we have now. Bum, bum, bum. Ooh, my gosh, hey? How would you have liked to get into a short trade here? Put your stop loss anywhere above. Entry was right here. You enter to the trade, okay? It goes against you very, very little. Very, very little. And then it's all profit after that. Look at that. That's the ideal trade. Isn't that what everybody is looking for when they're trading? They want to get into a position, maybe go underwater just for a few moments, but then afterwards it's all profit. That's the ideal, right? But very few people can do it. And you see, when you know what you know by learning what we're learning here at the school, you think to yourself, how could anybody ever get such a detailed trade without knowing this? Like, this is the essential knowledge you need to know to be able to find and pinpoint these exact areas, right? That's a thing of beauty. Okay, so what do we have now? So now we have supply here. Do we have a trend line to the downside? Well, you have this point here, you have this point here. But let me ask you, Let me ask you a question. When the banks were trading through this whole area here, were they focused on creating a descending trend line? Looks like a crisis, that drop. Yeah. Well, it would be explained that way in the media, for sure. The media would say, "Oh, massive drop. It's due to this and that and that and this." No, no, has nothing to do with that. The banks just took out a massive wall that was holding price up. And they did it with their selling. And then when they finally removed this wall and brought price back up to their selling area, they were able to start massively selling again. That's why it dropped like that. Okay, higher time frame forces were selling 12-month, monthly. This is what's causing price to drop. That's why these big moves. But the media is going to tell you the reason why it's dropping like this is because of panicking, because of whatever. They come up with the craziest explanations. But going back to my question, inside this rectangle, were the banks focused on creating a descending structure to connect a trend line to the downside? Yes or no? What do you think? It's important to know. Tim says no. Michael says no. Thulani says no. Roy says no. Yeah, no, 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 across the board. Exactly. They're not. Why? Because we just explained what they were thinking. They're thinking about removing this by creating supply and then reversing it back up to get the supply and push it down. So they weren't thinking. So that's why this trend line is of low value. If anything, there's a trend line on a higher time frame, probably connecting something like that. Okay. But to draw a trend line on this chart, I'd be focusing on this area as this peak being the beginning of a trend line. Why? Because it had a different agenda here. Okay. There's no start of a trend line here to connect there that's going to be of high quality, because this was a totally different agenda here. So we don't want to connect the two. But I'll leave this trend line here just so that we can observe and see what happens. Because I don't want to tell you, it's going to be like this and there's no other way. It's written in stone. That's it. You can't draw a trend line there and that's it. It's not going to be valuable. I'm just telling you my experience. I'm just sharing with you my logic for coming to the conclusion that this trend line is likely not going to be of quality. And then we'll see. Is it of quality? Does price care when it comes back up to those areas, or does it not care? We'll learn. Okay. All right. So this is what we have. Let's go back here and check the zones. Looks like this was the only initial zone here that started based on this time frame and its lack of proper candles. So I'll push that to, oh, look at that. Price is contacting it right now. Isn't that a thing of beauty? And then what, rally up from there maybe? Oh, look at that. Oh my God, there's so many trading opportunities you could take. When you know what's taking place and why it's taking place, there's so many trading opportunities. Like price contacting a daily supply zone and waiting for a 15-minute momentum shift to take place off of it, or a 1 hour, momentum shift to take place off of it, and then trading that for a short-term gain. I see those all the time. Okay, so let's watch. All right, so short-term momentum to the upside contacts a structure here. Look at that. Okay, probably a zone on a lower time frame. Yeah. How do I know that? How do I know that there's probably a zone on a lower time frame there? Do you know how I know? Because I'm able to zoom in with my eyes and read price. Probably a zone like, oops, there. Okay, this was a drop, base, supply area with a quick test, a further drop, a test a little bit deeper, and then down. You see the quick little test here? That's what it looks like on a lower time frame. That drop, test deeper into the zone, and then away she goes. Okay, how do I know that? Because I've been curious. When I looked at price action like this, I'm like, why did it turn from there? Why did it look like that? La, da, 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 da. And then I go into the charts and I study it and I journaled it. I'm like, because it did this and did. Then I asked myself, this zone on the lower time frame, what did it remove? Okay, what did it remove? Why is it that? Why is it that it was that exact zone? Okay, and that zone on the lower time frame, remove this one here on this time frame. And because momentum is so strong to the downside, it can't even make it all the way up to that daily supply, because that daily supply is not required to continue pushing price down. Only a supply on a 4-hour chart is needed. Then that happens. That is 145 level that you signed during the first session. 145 level. Yeah, here. It comes back to the first session that we did, the zones. Yeah. Okay, so this zone gets taken out here like that. Okay. And now we have a new supply area here. Just like that. And let's play it forward. I don't see anything else. Let's see. So there's nothing else here. You see that? But all-time low is really down here. So are these supply zones? I mean, it's difficult. I'd be very careful labeling these in a real world scenario as supply zones, because just because it's unreadable price action, it's not all-time lows, right? We know that there's price action there, so you got to be careful with that. But let's see what happens here. Well, it worked. It held supply, took out the previous lows before it retraced up into supply. Look at that. You think maybe there was a rally-based rally, momentum shift, supply. Okay, you see that? Look at that. All-time lows is about to be broken through. Are you seeing that now? How all-time lows is about to be broken through? That's going to be a pivotal spot, I think. What do you think, right? Because once price starts making new lows past that all-time low, then we know we have supply zones. But look, see, these lows were taken out. Does this look like supply to you? Okay. So pay attention to stuff like that, right? Okay. Trend line to the downside. Look, are you going to draw a trend line from starting here and put it at this point? Like, really? Does that look like it should be a trend line? I'd say no, right? I don't think so. Okay. Let's continue. Let's see what happens with price action when it takes out that all-time low. Look at that. See that? See how it took out that all-time low right there? That's important, wouldn't you say? So I would be drawing a supply here. Okay. Let's look at the rest of price action. I'm looking for imbalances now that push price to the downside. I'm looking for drops, bases, and drops, because that will tell me if there's supply. See right there, base, drop. All-time lows were right here. So now anything that bases and drops with momentum is supply and can be used to facilitate moves lower, depending on what's happening with the other time frames. So at this stage, when you're looking at the charts, you have to determine momentum. Okay. A concept that we talk about at the school is whether price is heavy or light. And it takes years to build up this awareness. When you're looking at the charts, you can determine whether the charts are heavy or light. And the more heavy a chart is, the more likely price will continue moving lower based on lower time frame supply areas. Just like when a chart is very light, it's more likely the chart will continue upwards based on it contacting lower time frame demand areas. Okay, so when you see this, like, look how it just keeps on dropping and dropping and it's pretty heavy. It's pretty heavy. So I'm not looking at, what's happening on the weekly and monthly charts at this point, but just by looking at the price action on the daily, I can see that it's pretty heavy. So finding nice supply zones with nice imbalances. What's a nice imbalance from a supply zone? What would be the definition of a nice imbalance from a supply zone? It would be structured base. Oh, come on. Nicely structured base. At least 2 full momentum candles afterwards. And a move larger than 2 to 1. So you take the size of the base and you take the size of the move away. If it's the size of the move away from the base is at least 2 to 1, that's a good move away. Okay, that would make for a good supply area. If that base is very clear and concise and good looking and based on, you know, the other formations of the other candles on the chart, it represents what the others, it represents a good base based on what the other bases on the charts look like. That's high odds. So when you have definition, what's the definition? Definition. This would be a good zone. Nicely structured base, at least 2 full momentum candles afterwards, a move larger than 2 to 1. You're not always going to get 2 to 1 moves, but you know, you're looking for a nice move away. So that's, to me, would be the definition of a good move. Okay. And it's heavy, price is heavy, you take the trade. So this would be the zone for a trade, which we call the magic zone, where the magic happens. Short signal. So you'd have your entry here, stop loss, you know, like that. Okay, that's how it would work, like that. And hey, if it breaks, it breaks, no worries. Okay, maybe it's going to create a demand zone, and then when that demand zone gets ripped through, create supply, and then you take a signal there. That's an additional signal, right? It's okay. And if it breaks through and starts heading higher, hey, that happens sometimes too, no biggie. All you got to do is ask yourself, why is it heading up now? And where is it going to stop? Is this journey going to continue lower? Yeah, okay. Especially when you're on all-time low scenarios. You don't know what force is going to come into play because there's no demand zones. So you got to wait to see what the force is going to be like. So that's real lifetime trading from the banks. We're not privy to that information, what's happening right this moment. I mean, we can guess and see by looking at the CFTC data to determine, are they massively short and they need to take profits on those shorts and it's going to drive price to the upside? Or do they still have room to get to maximum size? If we saw that they still had room to get to maximum size, that would increase the chances of this trade working out, right? So, but there's a chance it's going to rip through that zone, and that's okay. Don't beat yourself up for it. The bottom line is you took a high probability trade. That's all that matters. And I'll tell you, if you know what you're doing and you're doing it right, and you take the concepts and principles that we teach here at the school and you apply it properly, I am telling you right now, okay? I'm telling you right now, the vast majority of your trades are going to be winners. Okay? And even when you take a loser, you know, it's going to be hard to accept it. And but what you really got to focus on is not that you took a loss. It's like, whatever, you took a loss. It's, what did I miss and what's happening next? Don't spend too much time on what did I miss part, but what's happening next. When the markets are closed and price is not moving, that's the time to really look at, all right, what did I miss here? What was I not seeing here? You know, was there anything in the CFTC data that could have suggested that this move was going to be strong? Is this chart correlated with another chart that was coming into contact with a massive demand zone, which would have told me that the pressure to the upside was extremely strong and I just missed it? This is the information that I gather, and this is how you build up your knowledge of the markets. It's extremely, extremely powerful to go through this process. But I would do it more when the market's closed. Because when the market's open, you want to be thinking to yourself, okay, what's next? What's next on the agenda? It took out that supply area. It's heading higher, but the thesis is still that, you know, we're expecting a move to the downside because massive supply is in place. So what is the area that this is going to start reversing and heading lower from? Okay. So this is what we have now. And again, if you take a loss, no big deal. But this is a high high odds trading scenario. So let's play it through. Look at that. Not bad. So far, not bad. Rally down one more time. Would we prefer to see basing down here? Yes, we would prefer to see basing down here. Okay, we would. But we're not getting basing down here. But we got 2 of these candles down here. So this is consolidation away. Okay, it's spent time away from the zone. I'd prefer to see basing down here, but that's okay. Now this is a daily chart. If you're thinking to yourself, I'm not too sure how heavy this chart is, how much further this chart's going to move lower, I don't know, maybe this zone's not going to work, then you switch to a 1-hour chart and wait for the signal. Wait for demand zones to be removed, right? That show you the signals that price is going to move lower, and then you take your trade. And you can trade it with smaller risk. Because if you're looking for a 1-hour zone to take a trade off of, the amount of space between your entry and your stop loss is going to be a lot smaller, which means you can take the same size that you would have taken on this daily, but risking a lot less money. Or you can increase your size by risking the exact same amount percentage of your portfolio, but now your profit's going to be a lot larger because you are shrinking the amount of space between your entry and your stop. Okay. So so far so good. It's reacting. Okay. Again, it can continue higher or it can continue lower. Anything can happen. All we know is that this is a high odds scenario based on everything that we know to be true. Okay. So we'll play it forward. Okay. Here comes some selling. Oh, look at that. Okay. You see how the bottom here has been removed? Remember I told you that's a good sign. When price reverses up and hits that supply and then those lows are removed, that's a good sign. There you go. Lance writes, yeah, definitely can focus better when the markets are not moving. Yeah, I agree 1,000%, my friend. When the markets are moving, there's something about the lights flickering and price moving that just doesn't allow you to completely stay focused and be objective. Okay, look at that. Okay, guys, so there you go. There's your trade that worked out. Okay, and depending on what your trades are set up to be, I like to do this with my trades, right? I've been trading like this for a long time, and I find it really helps me to stay in my trades and ride them as long as possible. So I usually have my 2-to-1 targets, right? I enter into a trade and I break my position into 3. So I take 1/3 of my position off at 2-to-1 right here. Why is that? Because now if price was to come here and hit my stop loss, it'd be a break-even trade. I wouldn't take any loss. And then a lot of people say, well, why would you do that? Why wouldn't you just move your stop loss to break even? Well, the reason why you don't want to move your stop loss to break even is because you know how many times price will come and retest that zone and then drop? And then it would have just taken your stop loss. Yeah, you would have made a small tiny profit, and then price continues downwards. Then you lose the rest of the trade. So don't do that. Leave the stop loss there, because so many times it'll come and retest and go. But once that 2-to-1 target is hit, the trade is for free. It's free money. You know, you did the analysis, you did the hard part. Now it's just free money. Now you just wait and see how much lower it's going to go. Okay, but let's just see how much lower it goes. So 2-to-1's been hit. Now the trade is for free. Oh, it starts going up against you. You're not freaking out because the trade's for free. So it lets you ride through those moves that go against you. You're like, I don't care. Let it ride through, whatever. And remember, you know, you're selecting your target based on opposing zones where the forces are coming into play. In a situation like this where it's heading into all-time lows, I'd be monitoring the euro, US dollar, to see what the banks are doing with their positions. I'd be monitoring the Japanese yen to see what kind of zones are coming into play, because those two charts are going to dictate what's going to happen with the euro, Japanese yen, right? But if the momentum is to the downside and everything is good, you have your trend line here. Okay. Let's see, week. Where's the one I'm looking for? Downtrend. Oh, let's do it like this. Okay. There's your trend line. Let's make it thicker so you guys can see it. Boom. Nice and thick. There's your trend line. Let's not make it dotted. Let's make it a line. There's your trend line. Okay. So you've entered into this trade. It's moving down. You don't see any demand zones on the higher time frame, so you don't know how much strength is going to be going up or how much weakness is going to continue. You don't know. So what do? You take what you know to be true and you use that. Here's a trend line to the downside. It's legitimate, right? You got to move to the downside, a basing, a rally, a basing, and a drop. So what happens if this trend line breaks? Isn't this a legitimate trend line? Doesn't that mean this trend line should be used to facilitate a move lower? Right. If it breaks to the upside, what's likely going to happen? Maybe continue higher, right? Because there's nothing to keep it down at this point. All-time lows, so we have supply here. What do we know to be true about supply zones that are at the peak where the second contact of the trend line is located? What do we know to be true about those? They don't make good supply zones to keep a downtrend, right? So already, when you have just a supply zone here and a trend line like this, the second price starts building bullish engulfs to the upside, you already know the structure is not good. Okay? You already know the structure is not good. So you should be well aware that once this trend line breaks, you should get the hell out of this trade because it's likely going to continue higher. So this is why we study structure of price, the trend lines, what makes a good structure to the downside, what makes a good structure, you know, of momentum to the downside. That's why we study these things, so that when you're in a trade and you're more prone to be emotional because you're like, oh my gosh, I was up 10 G's down here, but now that price has moved up, I'm only up 8 G's. You know, that's 2 G's and I'm missing out on a trade. You know what I could buy with 2 G's? I could buy that stereo that I've been looking at. I can go on a nice cruise. You know, you start thinking stuff like that in the back of your head, and it freaks you out. And you're like, should I get out? Should I not? Because what if that 8 G's turns into only 6 G's and I'm going to be, shoot, I could have had 8 G's. You don't want to be thinking like that. What you want to be thinking instead is, what do I know to be true about this structure to the downside? It's well formed, trend line to the downside, but there's no supply to keep this price dropping. So it's either this trend line keeps price dropping, or if this trend line breaks, that's it, baby. This can shoot to the upside, and this is not going to be good. This will go against me. So the second that trend line breaks, exit the trade. And then it takes away everything away, because you are taking what you know to be true and you're using it. And you can't fault yourself from using what you know to be true. You can never fault yourself, okay? Because even if, yeah, at the very bottom you could have made $10,000, but when this trend line breaks, you only make $8,000. It doesn't matter. The point is, you got out at the 8,000. That's what matters. You took what you know to be true, and it made you go into a profitable trade, number one, and it made you a very nice return, number two, and it got you out when you needed to get out, okay? You're never going to get out at the very bottom or the very top. Sometimes you will, like that US dollar Japanese yen long trade idea where it hits supply, and I said it was going to drop because it's hitting supply, number one, on the monthly chart, and number two, the banks likely we're going to take profits on their long positions because they're reaching a size where they took profits on it last time they were at those amounts. That's all that matters, is following rules and following what you know to be true. Everything else is not important. Okay, so that's the trend line. So we would be watching that trend line, and you'd be setting an alert on this baby. Let's see. Can you even, I never checked to see if you can set an alert on price action that already existed. No, no. Okay, so we played forward and see what happens. Okay, it's responding. Why? It looks like there's momentum from supply on a lower time frame. Good, right here. Okay, that's coming into play. Good, and it's playing out. Beautiful. Price is very heavy. Isn't that a sign that price is very heavy? When a 4-hour supply zone is enough to propel price to the downside? Yes, it is. Okay, so you're still in the trade. So far, you're at 1, 2, 3, 4 to 1 on the trade. Oh, look what's happening. Okay, now it's come back up and it's basing. Now you better have your red flags because it's basing right at the trend line. If it produces a momentum candle to the upside, you exit the trade. That's it. Okay, one candle closed on the opposing side of that trend line. You exit the trade, plain and simple. Okay, look at that. Very close to not. Wow, very close to not. Let me see. Let me adjust this and see. Yeah, it was one candle on the opposing side. So that's it. That's your exit signal. Chart as exit signal. Okay. And you take your profits. Okay. Now, if you take 20 of these trades and you realized every time you exited, if there was a basing candle on the opposing side of the trend line, you determined that you were exiting too early, you can change your rules and say it has to be a momentum candle that closes on the opposing side of that trend line. And if it's not a momentum candle, then I don't exit. You decide, but you need to determine what's the scenario, okay? You need to take enough trades to see what ends up usually happening. In this case, look at that big momentum move to the downside, okay? But at the time when it produced that candle, you didn't know that. It could have easily produced a big green candle, okay? So that's okay, you exit the trade. Let's see what ends up happening. Goes even lower. Beautiful. Oh my gosh, look at that. I would have hurt to exit up there, but then watch this. But if your rule said it had to be a momentum candle, not a basing candle, then you'd still be in the trade and you'd still be watching that trend line. Okay, watching the trend line. Let's say you're still in because you didn't exit yet. Oh, look, another test of the trend line, even lower. Look at that. Right now, this is a 1, 2, 3, 4, 5, 6, 7. Yeah, 7 to 1 trade. 1, 2, 3, 4, 5, 6, 7 to 1 trade. Boom. Okay. Momentum candle to the upside. So look, not much difference between where you would have exited before or where you would have exited here. Okay. Momentum candle to the upside. That's it. You're out. Done. That's a winning trade. From here to here, it's a beautiful trade. Beautiful trade. And you're using the signals of the chart to determine when you should exit, because let's watch and see what happens afterwards. Let's see. Was it good to get out down there? What do you think? What do you think? You see how the chart tells you everything you need to know? Okay. Now it's busy doing something else. Would you have wanted to ride it all the way up here? Heck no. You got out down there, you exit, you take your profits, you move on, you do your analysis and move on. So let's continue with the supply, and there would be other signals as well, like, you know, the fact that this supply zone was removed here, right? So your stop loss actually would have been lower if you held on, because you would have had your stop loss right above that supply. Okay, once that supply gets taken out, you would even actually know right here that that was going to be removed, right? Because supply is here, the trend line is being broken here. What do we know to be true about those situations? It's usually going to break right through. So you could have gotten out even earlier once you saw the big momentum coming in through that trend line. Okay. But again, each scenario is different. You'll react differently. You'll have rules, but sometimes you will emotionally, you know, be triggered and you'll get out too early. You know, you're going to do things, and that's okay. Through time, you'll get better and better and better at controlling those emotions. Okay? Any questions, comments you'd like to make? Here's the other trend line. Let's see. There's a zone here. There. Okay, there you go. Yeah, that looks good to me. Bum, 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 bum. Yeah, the original short signal was up here. Beautiful, beautiful. Hey, imagine that. Look at that. And then you just short at every supply zone, move this stop to above this supply zone, then move it to this supply zone, move it to this supply zone, move it to this supply zone, move it to this supply zone. Eventually you get stopped out. That's an ideal scenario. Okay, when those ideal scenarios happen, these are massive, massive. My biggest trades that I've ever made in my life are trades that work out beautifully like this, where it's very heavy, price just continues, you just keep on moving your stop loss, you put new orders at every supply zone because you don't know which zone is going to be used to propel price. So you put orders there, you put orders there, right? When this zone gets created, you take these orders, you cancel them, and you put new orders here. When this zone gets created, you cancel the orders here and you put new orders here, right? And then that rides, you put orders here. When new zones get created, you put new orders there, cancel that one, and then new orders. As long as the trend lines and the zones are in line with everything, okay, and those are legitimate zones that you can trade, you continue to place your orders. Let's move this back here, and it would be this here. Like that. Okay. All right. There you have it. A work of art. Okay. Is that not a work of art or what? Beautiful. Beautiful, beautiful. Let me extend these zones forward. Okay. Take a look at the completed chart. There we go, like that. Okay. And let's look at one of your works. Here we go. It's a new student here that signed up. Was very excited about signing up. This was their first attempt to do the homework. And it's not bad. As you can see, we got some trend lines here that shouldn't be, like this one. Okay. This long one coming down, yeah, it looks like you could have, but we know when you have 0.2 and then price just hugging it, it reduces the value. So the trend line I would have is just from here to here, from here to here. Okay. Okay. That one. Yeah, I had those drawn in. Okay. Decent though, decent work, considering that they just signed up. The zones, got to be careful how you draw the zones. Okay. There was a zone here missed. Right here. That zone was missed. Let's see, did I get this one here? Oh, there was another zone missed right here. How did I forget that one? Right here. Oh, wait, where was all-time lows? Right there. Yeah, I missed this one too. Look at that. Another trade. Rally up into supply, drop, base, drop, supply, rallies back up into supply, and away she goes. That was a short trade signal there too. Okay. This one you got. Nice, and you drew it nicely too. Very good. Did I draw that one? Oh, there seems to have been one here. Drop, base, rally up into it. Yeah. Not this one, because this zone only got you down to here. And I don't believe, yeah, see where I put my crosshairs at the low of price? You can see that the basing already took place. So this move down didn't surpass the previous lows here. So this up here couldn't have been supply. Okay. Yeah, break of the trend line, zone drawn nicely, perfectly down here. But remember, this wasn't supply, so this couldn't be demand. Okay. And this, no consolidation away, rally, and then straight back down. So it's got to be below it. All right, good work though. Good work. Let's see. Here's another chart somebody wanted me to take a look at. I have the zone here. You got to check the work that we did in the previous classes to make sure that you have the right zones. I wouldn't draw this as supply because there's no consolidation away, you see? This zone comes straight back into it. There's no space away from the zone, so it would be up here. Okay, you'd have to include this top candle. like how I drew it here. That would be the supply. Okay. Supply here. Drop to new lows, but the formation of that tells you that's not supply. So lower time frame supply area is being created instead. Nice, you found that supply. Beautiful. And then again, this one here that was missed. Okay, this one, wow, well done. Not here. Break a trend line zone. Perfect. Not here. Perfect. Beautiful. Good work. Nicely done. Nicely done. All right, let me shoot this or screenshot it. Screen shoot it. I should screen shoot it. And where is my other version? There it is. Replace. Yes, thank you. Okay. Great explanations, great class, good tips. Hi, Kevin. When are the next level 1 graduations planned? At the end of this class. I'll ask you to submit if you're a level 1 student, if you've completed at least 2 full classes, not sessions within classes, 2 full classes, or if you've taken it upon yourself to look at the archived classes and do classes on your own, and you think your skills and abilities are at the level where it is required to be to graduate to level 2, then you send me an email and say, I've done this many classes, here, you know, my homework I've submitted to you on time. Please check my homework, and if you think I have the skills, then if you can graduate me, I'd appreciate it. Or I've only done 1 class, but I've done classes on my own, and I believe my skills are at the level. Can you check the latest homework that I submitted to you and tell me if you think my skills are at the level required for level 2, and then I can graduate you. Okay? That's how it goes. All right, so let's get to where we are today. Where are we today? Let's move all these charts. Okay. Okay. All right, let's look at the report.